Welcome viewers to my channel, Sensor 360 Investor. Before we begin, a quick reminder to read the disclaimer. Pause the video and read through this before you can carry on. In this video, I'm going to do a market update review, but with a slight difference. And today I'm going to focus on a potential path that the markets may take, and it's kind of a worst case scenario, so we'll look at that. So here is the SP 500. This is a weekly chart, and we're lucky enough to be able to capture both the financial Great Recession crash down here and the current bear market that's underway down here. So if we look at the beginnings of the market up here, we can see that it comes down. So the top is here, and the market comes down, makes a kind of a low, which is you get a little bounce, and then the lowest retested, undercuts, and then we get a meaningful bounce up to a declining resistance line here where it fails, and then we come through, undercut the low, the last low, get a secondary bounce, again reaches a point of resistance, and it's here at this level that the market begins its true capitulation stage. So we get this massive sell-off, a period of stabilization, further selling, and then we get a bounce. And that's really kind of a first false flag in terms of a recovery. Market then sells off again, washes out any remaining holders, and then starts to move up, gains momentum, and then back into an uptrend. And then we get this massive bull market run. So that's kind of what happened in 2009. So if we look at what's happening today, so let's clear up some of these diagrams. So my market makes a high, makes a lower low than the trough here, makes a lower high, it doesn't now take out the prior high, and then comes back down. At this level, we've now established a change in pattern, and we undercut this first low, try a little short bounce, come down to meaningful supports levels, and then we get the technical bounce up to a resistance zone, get turned away, and then we come in and retest and undercut the support structure here. So this look here is very much the look that we have here up to this point. So we now, if we follow the same path, then what the market should do, or could do, I should say, is undercut this support zone and then go back and retest it, fail at some level. So let's say this goes up, it would fail about here, and then at this point of failure, we would really then see an onslaught of selling. Market would come down pretty viciously, may have a period of stabilization, moves up, and then sells off again, and then finally finds a footing and moves back up. So if we look at the magnitude of the move, you can lay out a case, and this is pretty drastic. but we could lay out a case that the S&P could take a look at the 1800 level. And there's certainly a plausible path, but obviously a lot would have to happen in order for this to happen or occur. But then again, it did happen here, and this is not unusual in terms of bear markets. So this is what we need to watch out for in the longer run, in the coming months, and there'll be gyrations in between. And of course, there's no guarantee that this is the path the market will take. It could find support at any level, and that could be it. Some macro news could come in, geopolitics could clear up, the global supply chains may open up, the inflation bogey could get fixed, the Feds may stop raising rates and begin cutting rates. So anything could happen in the days ahead. But this is just one plausible path. Okay, so let me clear this up. We could also just see a potential that there could be a little bit more to come down here. That could be it. And then if we start to make a meaningful change of trend, and certainly if we can get above this level, around the 4,400 zone, then we could be in. And if we come back and we test and then move up, then obviously that's a totally different path that the market may take. But I thought it was worth sharing this plausible path with you, because if we do end up going in that direction, then there'll be a lot more pain to see. And we're still early on in the whole trying to get this inflation under control. So the markets have got some work ahead of them to come. Okay, so let's take a look at notable earnings. Earnings season kind of kicks off, and usually kicks off. It used to be Alcoa before. Now it basically starts out with the big financials, and so some of the big financials do report this week. You've got Morgan Stanley, JP Morgan, Wells Fargo also reports this week. I didn't put them on the list, but also other notable ones are Progressive Insurance, Domino's Pizza, and United Healthcare. I just wanted to give you a selection of some of the different, from different industries, rather than having a page full of just finance companies. So it's definitely Domino's Pizza is one worth watching, because it kind of shows you a little bit about what the consumer is doing. Progressive Insurance has been very strong throughout, and so we'll see if that strength retains, and then we should get an idea of what the financials look like from the reports from Morgan Stanley and JPM. UNH is healthcare, so a little bit more defensive at this stage. So they should have a reasonable report. Well, we'll see what they say and report. Okay, so please read the disclaimer here, and that covers it for this video. Remember to subscribe if you haven't, and click the bell icon for notification. And that is it for this week's video. I will see you in the next one. Thanks. Bye-bye.